Welcome to the Flow Tracy Monday Audio Commentary. This is Owen Tracy recording. It's 6:01 p.m. that is Central Time. Today is January 13th. And I do apologize for recording late today. I've just had too many meetings that are backing up and it's just delayed my progression. But when we think about what's going on in the market, I think we just can't ignore what's happening in the bonds. Because there's lots of political factors going on, and of course, Donald Trump will be inaugurated in a week. Then it's not like there isn't anything to talk about in politics when we think about Europe either. And then, of course, there's the entire question about what's going to happen on the political front slash economic front in China. All of that is begging a headline. But what's happening in the bond markets is more important because the 2-year yield is still hovering here around 4.37%. Now, in after hours, it's down a tad, and it's in the region of the 200-day moving average. It has broken the sequence of lower rally highs. Now, when we look at this chart, between 2022 and 2024, it looked like a type 3 top formation, where we had a massive reaction against the prevailing trend and then a period of right-hand extension, which morphed into ranging time and size. And the size of the top is in excess of 100 basis points. And when you've only got a peak of 500 basis points, a range of 100 is a lot. So now the next question, of course, is whether this is a failed peak or whether this is subsequently a rebound from a short-term oversold condition which will eventually roll over. The entire question about where will the Fed go, what will the interest rate be this year, hinges on what happens with the 2-year. If 2-year yields sustain the breakout, the balance of probabilities is there won't be an interest rate cut this year. If the 2-year yield compresses from here, then rate cuts are back on the table. And this is